Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on investing in Treasury bills, return up to 28% per annum. Further to the persistent hike in the monetary policy rate, MPR, the interest rate on fixed income instruments has significantly improved. This provides a great opportunity for investors as this high rate will not continue for too long, given the impact on the government's debt profile. With the inflation rate at 34.2% as of June 2024, the rise in interest rate has narrowed the negative real return on investment, less inflation rate. As a result, we thought to re-emphasize how you can take advantage of this great opportunity. Last week, the Treasury bills, T-bills primary market auction closed at impressive rates, generating a lot of interest from retail investors. A year-on-year comparison shows that the rates on the 90-day, 182-day, and 364-day bills rose by 15.6%, 15.1%, and 15.9% to close at 18.5%, 19.5%, and 22.1% respectively. This translated to a yield/return of 19.4%, 21.6%, and 28.3% respectively. Now, what are Treasury bills? Treasury bills are short-term instruments issued by the Central Bank of Nigeria on behalf of the federal government to raise funds. The CBN also issues Treasury bills to manage liquidity in the economy. When you invest in T-bills, you lend money to the government. What are the benefits for investors? 1. It has low risk as it is backed by the full faith of the federal government. 2. It's very liquid and can easily be converted to cash. 3. It can be used as collateral for loans. 4. It offers a higher interest rate than a savings account. 5. It has a maximum maturity period of 364 days, hence they are classified as short-term instruments which can be used to plan for short-term goals. 6. In the secondary markets, the tenor ranges from 10 to 360 days. Classification of Treasury bills in Nigeria. 1. Nigerian Treasury bills, NT bills. These are issued only for the purpose of raising funds to finance government expenditure. NT bills can be purchased by domestic, retail and institutional, as well as foreign portfolio investors both in primary and secondary markets. The primary market is where investors buy directly from the CBN through a public auction held every 2 weeks on Wednesday, except as advised otherwise by the CBN. The minimum investment amount is 50 million and 1,000 naira, but can be lower through investment outfits. The secondary market is where investors buy from existing holders of the bills and sell to other investors. You can also purchase T-bills through the secondary market Monday through Friday through authorized dealers like banks, stockbrokers, and discount houses. The minimum investment amount is 100,000 naira and in multiples of 10,000 naira thereafter. There are investment firms with technology platforms that enable investors to subscribe online. The current yields in the secondary market range from 21.8% to 28.4% depending on the tenor. The interest rates vary across banks and firms. How does it work? T-bills are sold at a discount value and carry a fixed interest. This is the difference between your discounted value, which is the amount invested, and the face value, which is the amount received at maturity, which is essentially the interest earned. It's as simple as that. You gave the government a short-term loan by buying Treasury bills, and they paid you back with interest at the end of the term. To simplify, if you invest in Treasury bills with a face value of 1 million naira at a rate of 15% per annum, you would pay a discounted value of 850,000 naira now, and at maturity, you would receive the sum of 1 million naira. The difference is the interest earned, 150,000 naira, which is paid at maturity. Differentiating between the T-bills discount rate and the yield. The interest rate is used to calculate the return on the investment. For instance, if the interest rate is 15% for the face value of 1 million naira, the interest earned for the year's bill will be 150,000 naira. However, the yield is the actual return on the investment and it's calculated by the total interest earned divided by the discounted value, which is the amount paid. Hence, the 150,000 naira divided by 850,000 naira will produce a 17.6% yield or return on the Treasury bills investment in a year. You can approach your bank or investment firms to sign up to purchase Treasury bills. With the current high inflation rate, investing in Treasury bills rather than leaving your funds in your savings account will reduce the negative impact of high inflation on your savings. You can go for tenors to suit your cash flow needs. For instance, if you decide to invest your kids' school fees due in September, you can invest in Treasury bills that would mature in September. Hence, you would not need to sell before maturity. Treasury bills are the safest form of investment and are suitable for investors with low risk appetite and with an investment objective to preserve capital. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.